This strategy I'm about to share with you in the next few minutes has made me over 20,000 US dollars trading the binary options market in the last 28 days. And shortly, I'm going to show you everything about this strategy and how you can apply the same tool, duplicate the same result, just as I have already achieved. So this is a strategy that you can use on all type of time frame, but this strategy I'm going to be discussing with you today, I'm going to be using the 1 minute time frame because I apply this strategy most times on the binary options market. But mind you, you can use this strategy to trade forex, you can use it to trade crypto, you can use it to trade any other kind of asset that you are comfortable with trading. That means you can trade it on any type of time frame. So without wasting further time, let's get started. Now the first thing we will do is to try to identify the trend. This is one of the most important things that you need to pay attention to. So the trend is understanding the current market condition. Who is in charge of the current market condition? Is it the buyers or is it the sellers? Now, if you have identified the person, or if you have identified the trend, then you can look for the potential or an entry of how you can enter into a trade with this simple strategy. So paying attention to this chart, you will see that this is a very smooth downtrend situation because we are having lower lows and lower highs. Now you can see that this is a high and this is a lower high. This is also a lower high, right? So now you can say that this is a strong downtrend situation. Now the next thing you are going to do is to try to identify the current low, and then you need to wait for some pullback. The price needs to pull back for some time. That is the only way we can identify a potential trading opportunity. I mean, you already know that the market does not move in just one direction or simultaneously. It's going to move in a certain direction, and then after some time you are going to experience some pullbacks. Now, the pullbacks you are going to experience are going to be the retracement phases, or we use that word, the retracement phases. That means the price may create a new low, and then you are going to have a retracement. And if you are having a downtrend, you are going to understand that the retracement phases are going to be some minor uptrend. That means the price is going to retrace opposite of the original trend. That means if the price is a downtrend, as you can see on this chart, the retracement phases will be a minor uptrend. That means we will be experiencing a trend that will be a little bit opposite of the original trend. Now, looking at this chart, you will see that the price has just created a little or minor uptrend. This is like you can see on this level. You can see that the price over here retraced back for some time. You see the price fell down strongly, and then this was a retracement phase. You can see that the price retraced back, creating a minor uptrend, because if you zoom in, you will see that this is a minor uptrend, because you can see now that the price were creating lows that are higher. Now, having identified that, we are going to potentially look at how we can enter a trade again in the future. Then we will look to see if we can have a pattern like this to be able to enter into a trade again. Now, having seen that the price has created this current low, we need to wait for a little pullback. These pullbacks are what I consider to be the retracement phases. That means the price needs to retrace back to create a minor uptrend, which would be a trend that will be a little bit against this original downtrend, and that is a minor uptrend. That means the price should try to create some lows that are going to be higher than the previous lows. I mean, we need to have higher lows and higher highs. This would be a cool-off stage of the price. Now, if we can have that type of retracement, the next thing is we will try to connect. We'll try to draw a trend line, and that trend line will be on the support level of the price, which means we will do our best to connect all the higher lows together to be able to get the structure that the price is trying to make. And if we can identify that structure, the next thing is we are going to wait to see if we can have a breakout from that trend line. Now that breakout is what is going to give us the confirmation to be able to enter a trade in this type of market condition. So we need to wait to see if we can have a proper trend on this lower scale. We need to have a proper uptrend, which is a proper minor uptrend on this level, which will confirm to us that the price is now trying to cool off, or which would be the retracement phase of the price. And then if we can have that retracement, we are going to draw our trend line to be able to identify our area of value. Our area of values are the areas where we can potentially enter into a trade. All of these levels you can see on the chart are not very important, okay? You cannot pay attention to every level that you are currently seeing on the chart. There are some levels that are more important, and those are the levels that we should pay attention to. Now the price will move and create what we are expecting the price to create. If something different is happening, then that is going to be a sign that the price is, or that the setup is going to be an invalid setup. We need to have a minor retracement phase like we are having, that we already had in the past. If that happens, we are going to look out or to see if we will be able to enter into a trade or not. Now I'm going to show you the exact entry when you should enter a trade, and I'm going to show you the exact pattern, how the price should look like. I'm not saying this is going to happen 100% of the time. No, it doesn't happen 100% of the time, but in all market conditions, this is what I'm going to show you today will be a little bit, can be applicable to almost all type of market condition. That is, if we are trading, or if you are trading a pure price action with no indicators or no bullshit. So you can see now that the price is creating a minor uptrend now, because you can see now that it's creating higher lows. You see now this is a low, and this is now in a low that is now higher than this low. So on this type of condition, we can now say we can now apply a trend line on this level. You see, we can now apply a trend line on this level, connecting at least two areas of the price. Now, when you have connected this trend line on the support level, the next thing is to wait to see how the price continue to respect this level. And what are we potentially going to do? Potentially in the future, if we can have this level broken, which is this trend line broken, it will be a sign that this structure of the price has broken, and then we can expect that the price should fall down to create a new low in the future. So this is what we are going to wait for. If we can have a breakout from this level in the future, then we can consider this to be a broken structure, and then we can enter into a trade in this type of market condition. So the breakout are the most important things you need to pay attention to have. If we have those breakouts, it is a sign that the structure is going to change. Now understand, I have mentioned this multiple times, that the price will always move in structures. The price doesn't move in a straight line or whatever that a lot of people have told you. It moves in structures. Now the price moves either in an uptrend, it moves in a range, which means in a straight line, or it moves in a downtrend. Now if we are having a downtrend, we are going to have the price move step by step, meaning it will create one step, it will retrace, create two steps, retrace one step above, and then it creates another two step downward, and then it will retrace one step above. That is how the price moves. So now we can see that the structure is very clear, that we are having a little bit of a minor uptrend, which is a confirmation that yes, this trading setup is going to be a valid setup. Now, since we are having that the price has respected this our trend line at least twice in the past, we can now wait to see if we can have a breakout from that trend line. If we can have a breakout from that trend line, the breakout is going to be our entry trigger to be able to enter into that trade. So you can see now that the price is now retracing back to our trend line. You see the price is retracing back. Now in this type of market condition, if we can have a breakout, the breakout is going to come and it will close below this our trend line. Now the price must close below the trend line. If it doesn't close below the trend line, you cannot place a trade. Now the candle that closes below the trend line is the candle that is supposed to be the entry trigger. Now if immediately the price closed below the trend line, then you can immediately enter into a trade after the close of that candle. You see again that the price has respected this trend line for the third time, which is a sign that very soon we can have a break of that structure. Now the more the price respects those trend line, the better for us, the better for those trading strategy, because it shows that the trend line is very strong and that the structure is also very strong. And if we can have a breakout from that structure in the future, the price is going to fall down very, very strongly. Now you can see that the price is still respecting this trend line. You can see the price is still respecting it. It hasn't closed below it yet. You can see that we are having some rejections on this level. Now we cannot place a trade because still the price is yet to close below that trend line. The price has closed below this trend line, and if I were here, I would place my trade on this very candle. And you can see that after the price has closed below on this candle, we can sit back and wait to see what happens. The price is going to continue to fall down very, 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 very strongly. So now we pay attention to this candle. This is a candle that closed below the level. You can see that this is a candle that closed below. Let me get this correctly. You can see that this was the candle that closed below this trend line. And you can see that since this candle closed below this trend line, you can see now that the price has continued to fall down in the original trend, which in this condition is a downtrend. So you can see that this is a strategy that you can practice and apply on all type of market condition, on all type of asset, being the forex, being the crypto, being the binary options market, being the 1 hour chart, being the 5 minutes chart, the 15 minute chart, the 10 minute chart, whatever chart you are trading. You can apply the same on all time frame, and you can use to trade anything you want to trade, whether it is the crypto or whatever market you are interested in trading. So this is a strategy. I hope you've learned something with this strategy, with this video, and you can apply the same when you decide to trade. You can see, ladies and gentlemen, that after the price has closed below this trend line, you can see what is happening right now with the price. It has continued to fall down very strongly in favor of the sellers. This is all about this trading. This is all about this video, and this is all about the strategy. Do well to go back to your screen to practice it and master it and apply the same, so you can duplicate the same result just as I have achieved in the past 28 days. So this will be all about this trading. This is all about this video. And if you have any questions about this video, do well to drop them on the comment section. I'm very good at replying to comment on the comment section. So on this note, I'm going to end this video here, and I'll see you again next time. But then keep trading, keep working hard, and have a good day.